$70,000 battle. It's February 2026, and the crypto world is holding its breath. For the last 2 weeks, Bitcoin has been stuck in a $70,000 cage. Every time it tries to break out, it gets slammed back down by massive sell walls. In just the last month, nearly $800 billion has vanished from the total crypto market cap. While the mainstream headlines are screaming, "death spiral," the smart money is doing something completely different. Today on WealthWise, we aren't just looking at price candles, we're looking at the why. Why did the massive rally of 2025 suddenly hit a brick wall? Why is the Clarity Act in Washington causing a heart attack for investors? And most importantly, by December 31st, 2026, will Bitcoin be sitting at $150,000 or crashing toward $40,000? Let's get into the truth of the 2026 market. Part 1. The current state, the February freeze. Let's look at the numbers as they stand right now. Bitcoin is currently toiling. It's struggling to find a direction, hovering between $67,000 and $68,000. For anyone who joined the party late last year, this feels like a disaster. Remember, in October 2025, Bitcoin hit an all-time high of $126,000. We've essentially seen the price cut in half in a matter of months. There are 3 main reasons for this freeze. First is the $70,000 wall. This is a psychological barrier where thousands of trapped investors from 2025 are finally selling just to break even. Second is the ETF exodus. For the first time since the spot ETFs launched, we are seeing billions of dollars leaving funds managed by the giants like BlackRock. Finally, we have the altcoin bloodbath. Ethereum is struggling to stay above $2,000, and many smaller projects are down 70% from their peaks. The easy money phase of the cycle is officially over. Part 2. Why did this happen? The 3 smoking guns. Markets don't crash for no reason. There are 3 specific smoking guns causing this 2026 correction. The first is a global risk-off shift. In the past, people called Bitcoin digital gold. They thought if the world got messy, Bitcoin would go up. But in 2026, Bitcoin is behaving like a tech stock on steroids. With global tensions rising and bond yields staying high, investors are fleeing to physical gold and the US dollar, leaving crypto out in the cold. The second gun is the Clarity Act stall. For years, the industry waited for a law that would finally tell banks exactly how they can legally hold crypto. In late 2025, everyone thought this law was a done deal, but it's currently stuck in political gridlock. That regulatory tailwind we expected has turned into a regulatory fog, and big institutions hate uncertainty. The third gun is the quantum scare. Lately, experts have started flagging concerns about the speed of quantum computing. There is a growing fear that Bitcoin's security might need a massive, risky upgrade soon. While this is a long-term technical problem, in a nervous market, any bad news is used as an excuse to sell. Part 3. What to expect by end of 2026. So, where is the bottom and where is the top? We have 2 paths ahead of us. The bear scenario suggests we are in a correction phase, similar to the 2022 winter. If history repeats itself, we might not see a true market bottom until the final quarter of 2026. In this version of reality, Bitcoin could drop as low as $50,000 or even $40,000 before it finds enough buyers to push back up. However, the bull scenario is still very much alive. Major Wall Street firms aren't giving up. They see 2026 as a grind year. They predict Bitcoin will end the year between $130,000 and $150,000. Why? Because the plumbing of the financial world has changed. Over 170 public companies now hold Bitcoin on their balance sheets. More importantly, we are seeing the post-halving expansion. Historically, The year after a halving, which is 2026, is when the actual supply shock starts to bite the sellers hard. Part 4. The WealthWise verdict and strategy. The reality of 2026 is that crypto is moving from its speculation phase into its infrastructure phase. We are moving away from the casino and into actual utility. Don't expect euphoria or overnight riches anytime soon. Most experts are calling 2026 a slow grind upward. It's going to be boring, it's going to be frustrating, and it's designed to shake out anyone who isn't looking at the long-term picture. To navigate this, watch 3 things: the $60,000 support level, any news regarding the Clarity Act in Washington, and the daily ETF flow numbers. If the big institutions start buying the dip again, you should probably pay attention. Crypto isn't dying, it's just growing up. And as any parent knows, growing pains are always painful. That wraps up our deep dive into the 2026 crypto landscape. If you found this breakdown helpful, make sure to hit that like button. It helps the WealthWise community grow and brings more high-level analysis to people just like you. Don't forget to subscribe and turn on notifications, because in a market this volatile, being 24 hours late is the same as being wrong. We want to hear from you. Are you buying this $68,000 dip? Or are you waiting for the $50,000 death zone? Drop your strategy in the comments below. Stay disciplined, stay informed, and as always, stay WealthWise. I'll see you in the next